early warning signal. What is it? So this is, I call it, I called it E.W.S because it's an early warning signal, particularly when things are about to go south, particularly when prices are about to drop or the market is about to undergo some pressure. And it tends to work. It works pretty consistently. In fact, I will tell you that whenever we've had a major pullback in the market, this is 100% of the time has detected it. Now, the downfall, no indicator is perfect. And if anybody tells you an indicator is perfect, then don't believe them, because none of them are perfect. And you probably know that, but if you don't, you'll know it soon enough as you go on trading. So where this one is perfect is at detecting the big downdrafts that we have, pullbacks, corrections, major pullbacks, corrections, those kinds of things. Where it's not perfect is sometimes you'll see the beginnings of a signal and it tends to be a false signal. Doesn't happen too often, but it does happen. And I'm going to show you some examples of all these things. So again, this is not a trading system in itself, but it can augment a trading system. So a really good example of this is the Monarch trade, which is a broken wing butterfly trade that we use. And I'm going to show you an example of trading the Monarch system with this and without this in a minute. You'll see the dramatic difference. So it's not designed to be a trading system in itself. It's really designed to inform your trading strategy, whatever that is, and to tell you, oh, a major pullback might be coming, or a major correction, or even a bear market. All of those, again, 100% of the time we've had that, this warning indicator has shown it. And I'll show you some examples of that momentarily. So because of that, it can be useful for a lot of different strategies. And again, I'll show you an example with the Monarch, but I'll show you just some charts, and you'll see how if you were trading something that was, in particularly something that was either bullish or required more of a flat market, this would be really helpful, because it's not so much of an indicator as which way the market's going to go or anything like that. It's an indicator that says things are about to go south. And that's a lot of times, many strategies get hurt when that happens. So it sure would be nice to know. And as I said already, 100% of the time we've had major corrections or bear markets, this has been able to detect them. So you'll kind of see how that works. And so, all right, let's get to some examples. I'm going to show you some live examples as well, but let me first show you sort of how it might look in real life. So, this is an example of the bull market of, 2019. Things are cruising along just fine, getting into 2020. And you'll notice the time frame here. This chart ends in February of 2020. So you'll recognize, or you'll remember that COVID was coming on the scene right about then. And we had a huge bear market pullback. When that happened, the market dropped, 20-ish%. So, but up until that point, things are looking just great. I mean, we had a couple little, minor corrections, but these are just normal gyrations of the market. The market never goes straight up. So this all looks just fine. No big deal. Then this happened. And, if you didn't know it was coming, and of course, a lot of people didn't, this is scary looking. I mean, we lost a huge amount of market cap. Many people's investments went down. Now, COVID fortunately recovered pretty quickly. So if you didn't do anything, if you didn't panic and you stayed in it, you recovered pretty quickly. That said, all markets don't do that. In fact, the market we're experiencing right now, this is, we're getting close to being a year old, and it's I don't think we're done yet. So we're at least 3/4 of a year old, and so this current bear market that we're in is a little different story. But anyway, here this one is ugly enough, and of course you didn't know when it was going to end. If you were in the middle of it, of course everybody was wondering. Well, the E.W.S signal went off way up here. And so if you knew that and you had an opportunity to react, you would be able to put your portfolio or your trades into a position that wouldn't get hurt so much, and in fact may even profit from what happened. And that's exactly what we did. And you'll see, I'll show you some examples of particularly, again, the Monarch trade and how it responded during COVID. So sort of remember this picture that kicked off right around the end of February. And this is what happened. Now, again, we recovered quickly. So those people who had long-term portfolios, things were okay. But short term, and if you were a trader, it was pretty ugly. So let's look. We're going to look at how this works. But before we do that, I want to switch over and actually look at a couple more examples. Okay, so the time frame we're talking about here, and you can see we dropped from, sort of you see the numbers up here. This is here's the close. Open, high, low, close is what these numbers up here represent. So whenever I highlight a day, you'll see those. So we were up around 3,300, and this thing turned red. And when that happens, and I'll show you in a minute, we'll go back and I'll kind of show you why that happened. You'll see that when it turns red, that's sort of the danger zone. That's when we want to be careful. Well, in the Monarch trading system, we would put on negative deltas. And so this entire period, we would be profiting from this drop. But, a lot of normal traders wouldn't. This would be a difficult time. And it was a difficult time. And fortunately, very short-lived. We didn't know. But you can see we dropped all the way to 2174. And then things sort of eased up over here, and we would have, again, in the Monarch, we would have gone to flat deltas. But this was a fantastic indicator right here because it showed us really good signal right at the very top, right before we made this major drop. I'll show you a couple other examples of this. I'm going to go to current times, really. I'm going to go just to the last couple weeks. And you can see that right here, the E.W.S signal turned yellow. Now, yellow just means caution, right? Just like a yellow light. Caution doesn't mean you have to stop, but it means caution. So what we do with a lot of trading systems is we will go at least to very neutral deltas, maybe even slightly negative, but at least neutral, so that you don't get hurt no matter what happens. And so that's what we would have done here. And then, of course, here we got red. And then we would, and again, in the Monarch, we would go negative deltas. But you can see, regardless of the trading system, you can see how this signal, this E.W.S signal, would have kept you away from what was a 12% drop in the market in 2 weeks. I mean, it's a pretty big, pretty hefty drop. That's a lot, 12.5% in 2 weeks. So it would be really nice to know that that's coming and to be able to avoid some of that. Let me just show you a couple other examples. And I'm going to go, you'll see them all through here, especially this year. We had a lot because we've been in this bear market. So, here's another example right here. What is the date on this one? Is April 22nd. So, a few months ago, we saw the signal go red. And so from there, you can see that, all the way down to here, really it turned back green right here. But this would have been a nice, even if at the bottom of that day to here, that's another 8% drop. And so, again, be nice to know that that's coming and to have some idea about what to, how to adjust your deltas or take trades off. It depends on how you're trading. What, in the Monarch, we would adjust deltas to negative and we'd profit from this. But even if you were trading a very long position, you could at least know, hey, I'm going to close this till it turns green again. There's lots of ways that you can use this. So let me just look at a couple other major corrections. One of the big ones, obviously, we got this year, which we kind of looked at a couple examples. We've got COVID, which I call it the COVID correction. This is a big one, right? This is the one we just looked at the beginning. But we had similar sorts of things happening, back here in 2018. You see all these red bars. Here's a good example. We would have got neutral on the yellow. We would have got negative when we get to red. And this, then you would have profited from this drop. So there's another example. And I've gone back and I've looked at every example of this happening all the way back to where these signals exist, and it's very consistent. As I said, every one of these major corrections has been indicated by this by this signal. So that's a pretty nice thing to be aware of. And it allows you to at least protect yourself. And again, it depends on what your trade. Like with the Monarch trade, what we would do is we'd get deltas to be neutral. If we see yellow, we get deltas to go negative. If we see red. And in the vast majority of the time, we're going to actually profit from that. So, and a good example of that is we're trading. I'm going to show this a little bit later, but we're trading. We'll go up to the current day, right through this negative time. And I have a trade on that has been on for I guess a couple of weeks, and we've got negative deltas, and it's profitable right now at a decent rate. Let me go back real quick here and talk about how this works and why it works. So first of all, it's important to know that the vast majority of the market volume is made up of institutional investors. And what we mean by that is big, insurance companies, pension funds, hedge funds, professional investors, investment banks. These are the guys who are really moving the market volume. The rest of it, that extra 20%, that might be small traders or small funds, but the big market volume, the things that causes the market to move, is made up of professionals, large organizations trading billions of dollars, or in lots of billions, in many cases. So these are the things that move the markets, that actually cause markets to change their character a little bit. So that's important to know. And when markets are about to go south, when they're about to drop, two things happen. And they happen because these big organizations take action to protect themselves that show up in certain areas. And that's really what we're looking for. And if we can identify those things, if we can say, oh, the big money's doing this, then we have a pretty good idea that they know something's coming, because I don't have the resources personally to monitor all the things that these big hedge funds and investment banks monitor. They know in a very great detail and in tremendous depth. They know what's going on with the investments they have and with the big organizations out there that are moving the market, and the big sectors that move the market. As an example, a lot of people don't know this, but there's a lot of different market sectors, but tech alone makes up about almost a quarter of the volume in the market. So that's the one that moves the market. Investment banks know that, hedge funds know that. So they know a lot of these details that the average person doesn't know, and they have the resources to monitor them. I personally don't want to sit every day at my computer, hours on end. And, I do my trading in minutes. I don't really spend lots and lots of time evaluating the markets and looking at those things. So I let these guys do it for me. And then I like to watch what they're doing. How do I watch what they're doing? Well, they're the ones who are moving the big money. So there's two things that happen when markets go south, when markets drop or are about to drop. You see large volume selling. It's got to be large because it's going to be one of these big companies. If it's a small individual investor, it's not. We're not talking about somebody who's unloading 100 shares or even 500 shares. We're talking about millions of shares. So when people start unloading or selling, or even selling short, right, any large volume amounts, that's a pretty good signal that somebody who's in the know, somebody who's got an entire research team, is getting uncomfortable. So that's something that we like to watch for. The second thing is, if I can't sell, maybe I don't have any options to sell. Maybe I don't want to short. What am I going to do? I'm going to buy put options. It's the same thing. Or if I have a large position and I want to protect it, then I buy insurance in the form of put options. So when there's a lot of volume of put options going out, particularly in the shorter term expirations, people normally are not making these moves, these protective moves of buying put options. They're not normally doing them for 6 months down the road. They're normally going to do them for, literally the next move that's going to happen. And then they'll profit from the put. They'll take the money and they'll, be on to the next phase of their investment. So when I see these two things happening, then I have some idea that there might be risk of things going down. So this is really how E.W.S works. It monitors this large volume selling, and it monitors the pricing of the short-term put options and whether or not those are getting, relative to other options, getting expensive. So I know that's probably a little complicated, but that's basically what we're talking about, and this is what E.W.S monitors. So to give you an idea of the results of this, this is the Monarch without E.W.S. It can be traded without E.W.S, and you see a good example is from 2020. And by the way, this drop right here, this big drop, this is COVID. So you can see that COVID had a big impact. But once we got to the bottom, things were pretty smooth right up, nice, reasonably profitable. But boy, look at this first couple of years, pretty choppy. And that's because this is just trading the trade, the Monarch trade, without any idea or any indicator or even paying any attention to what the market might do. Now, throw in the E.W.S signal and start monitoring what the big money is doing. And remember, we're monitoring the big money and we're following the big money, and we get a completely different picture. And in fact, I want you to notice, I keep calling out this COVID example. And so if I go back up here, you'll see this big drop from kind of February to March of 2020. And now I look here and it's all of a sudden it turns into a big gain. Well, why is that? Well, because the big money moved first. And when I saw it and I was able to follow it to a degree, and we have rules for doing that within the Monarch, but it's really the E.W.S signal that made the difference. I can follow the big money and really respond even a little quicker because it takes them time to move their money around. So as soon as I see the beginnings of it, I can make a move, and it works really well. Because the markets are sort of forced to follow the big money. When there's tons of selling, prices go down. When there's tons of buying, prices go up. So we had some idea what was going to happen right at the very beginning, and that's why I'm going to go back up to here, and that's why when this bar right here, and I had it on my other chart, which I'll bring up here in a second. This is what turned my E.W.S signal red. This bar was a big volume amount of selling pressure and put buying. So all that happened at the same time, and that it was a good indicator of what was going on in the markets. I'm going to go right back to that one example just to kind of drive it home here. Here we go. So it was right here. This is that same bar I was just showing you on the other chart that I had in the slide. On this bar, you'll see there was both of those things happen. When it turns red, both of those things that I talked about are happening at the same time. So there's an inordinate amount of short-term put buying that's driving those prices up. That's one thing. The second thing that is happening is we're seeing the big downward volume. So here you go, and we got the red signal, and it was sure enough an indicator that things were about to go south, and so we were able to protect ourselves. And that's why when I showed you the two examples, the two slides of one with E.W.S and one without it, is the one that uses EWS was able to switch over to a slightly short deltas, a shorter position, or slightly negative deltas, I should say, and actually profit from this move as opposed to just getting out. Now, getting out would have been okay, right? Don't get me wrong. It depends on your trading strategy, depends on your trading rules. Getting out can be fine. But sometimes you might want to profit from those downward moves, and you can do that easily enough with that particular trading system. But we had a pretty good indicator, and again, every single time these things happen, this indicator goes off. When you see a big correction, a big pullback, a bear market, you'll see this happen. Now, there are occasionally what I would call false positives. In other words, you get some indicators. I'm going to give you a couple examples here. Like right here, you see these slight pullbacks, and it didn't turn red, but it turned yellow. That happens sometimes, and yet it's fairly short-lived, and there wouldn't really be any harm done if you were responding to it. Again, with the Monarch system, we don't really have any big issue with that. We might flatten our deltas, we might not, but it's not going to really cause any big pain. And they're typically fairly short-lived when they're false signals. So anyway, not a big deal there, but it does happen occasionally, and I think that's something to be aware of, is that no indicator's perfect. So good to keep that in mind. For those of you who are watching this on YouTube, this will be there in our channel. If you need more details, click the link below and in the comments, and you'll see how to go about getting access to this. We do put it, sometimes you'll see it show up on our YouTube updates, but really you need the daily signal to do a quick response. So we'll have more information there for you.